Hello and welcome. You're watching Business Today TV. This is Market Today. I'm Sakshi Batra and with me is Shail Bhatnagar, editor for markets on Business Today TV. Well, the Indian markets failed to hold on to gains and closed in the red for the second straight day yesterday. Now, will the consolidation continue? And what are the factors that will weigh on the markets today? All of that coming up. But first up, the top headlines this hour. Indian stocks are likely to consolidate with a weak bias on Tuesday despite the rally on Wall Street as local traders book gains near record levels and keep an eye out for monthly expiry of futures and options contracts later this week. Meanwhile, all eyes remain glued on the US Federal Reserve as it starts its two-day meet to discuss the future trajectory of interest rates on Wall Street. Traders say a 25 basis points rate rise is baked into the prices and it could be the last one for 2023. Very good morning to you, Shail. Now, I shall remember the last time the Nifty really fell 2 days in a row was exactly 1 month ago on June 22nd and then June 23rd. And the key support for the Nifty has been from then 19,700. That got reached yesterday on a closing basis. What do you expect on the Nifty today?
Good morning, Sakshi, and good morning to all our viewers. Welcome to this bright Tuesday morning. We've had rain in Delhi and that's cleared up the entire sky. It's a deep blue color that we see outside. I wish the screen were as clean as the sky is in Delhi, Sakshi. The reasons are plenty. The Nifty is struggling, although the broader markets is in perfect shape. And why is the Nifty struggling? It's top heavy. The market is choppy, and we are going through a phase where we have profit booking falling heavy on the markets. So all put that together, you've seen a lack of leadership that's emerged on the Nifty. Yeah. And we've seen a lot of problems coming in despite good news. Yeah. If you see, banks are not performing despite stellar earnings from ICICI Bank and Kotak. We've had a corporate development on ITC, and yes, that led to a fall in prices. And that's what is bothering the Nifty so far. Sakshi.
Absolutely. Shail, also on the bank Nifty, that was seen consolidating the large part of yesterday, but in the end, it actually mirrored the Nifty move as well. So what are you expecting here today? I mean, from the PSU banks, are we going to see any bright spots?
Sakshi, bright spots abound. Like I said, the problem is only with the Nifty and the Bank Nifty, and that's because we lack leadership at the moment. Markets on the blue chip side are extremely toppish. The volatility as well as valuations are shooting through the roof. So that part of the market is a bit of a trouble. But the broader markets are in absolute fine shape. You've seen value being exploited and sought for in the PSU banking basket. The PSU railway basket is doing amazingly well. There has been a huge demand of quality PSU stocks in the NBFC space. Look at Canfin Homes, look at PNB Housing Finance, look at PFC, REC. All that we are trying to do, and on the long side, part of FMCG is booming. Look at Bata and Colgate. So the broader market's advanced decline is in perfect health and in perfect shape. Wherever markets are seeing value, they're going after it like there's no tomorrow. But the Nifty is in a bit of a issue, and that's because we've seen a very sharp run up happening there. Markets are likely to be choppy. 19,561 on the Nifty and 45,600 on the Bank Nifty are the reasons where bulls are still alive, and beyond that, let's take a call after that.
Absolutely. Also, Shail, from the F&O space, a lot of stocks will be in focus, especially Dixon Technologies, Jubilant Foodworks, Delta Corp, and even KPIT Tech. They will all be reporting their June quarter earnings this time around. What are you keeping an eye out on from the F&O space, since this is the space to watch out for ahead of the expiry on futures and options?
Yes, actually, I think earnings is what is going to drive sentiment, and sadly, so far we've seen all good news being sold into, specifically in the NBFC space. Today, we'll be discussing earnings by Canara Bank, and as you know, it topped out yesterday and it ended slightly lower. And the earnings there are fantastic. So it's sell on news and buy on rumor kind of a market, and exactly what you mentioned. It's an earnings heavy week that is upon us, and the only problem is that every single earnings, good earnings, is definitely being sold onto, and corporate developments which are not liked by the market, especially on the demerger of the ITC business, that is creating negative sentiment. We've seen ITC being the top loser on the index, Nifty index yesterday, down about 3.5%. That's one reason why I feel a little edgy on the indices, which is the Nifty and the Bank Nifty, but the broader markets are doing tremendously good job. Deep value emerging in the entire PSU space, whether it is banking, whether it's defense, whether it's NBFCs, all of them are booming, Sakshi.
All right, Shail, let's also keep an eye out on what is the handover that we are getting from the global markets. Remember, on the Wall Street, the Dow Jones is at a 52-week high level. It notched higher for 11 straight sessions of gains, its longest winning streak since February of 2017. The S&P 500 ended about 0.4% higher, while the Nasdaq also gained about 0.2%. Also, we did see, of course, it's busy earnings week on the Wall Street as well, with big tech companies like Alphabet, Microsoft, Meta, which will be reporting its earnings, and also traders will be watching out for the FOMC rate decision and the broader consensus on that 25 basis points hike. The Asian markets did have a cautious start. We did see Nikkei slipping about 0.3%, but bright spot emerging on Hang Seng. That's up by about 3% as well. In trade, so mixed cues from that one. Gift Nifty indicated a muted start right in the early morning trading session, but it's all eyes on the liquidity front. The foreign investors, however, were net sellers in the cash markets yesterday. The DIS, however, bought about 934 odd crore rupees in the cash markets. The FII sold about 83 odd crore rupees as well. Shail, it's been liquidity as a key factor that has led the Nifty to all-time highs so far. Is that momentum still intact?
Sakshi, in the broader markets, yes. The pain point is definitely the Nifty, where we are seeing weakening momentum. You see how the Nifty ended yesterday at its day's low. And even now, the indications that we get from the Gift Nifty or from the Asian markets is weakness. This is fine, that's not a problem. I'm looking at first the 8 EMA to hold on the Nifty, and then of course the 10 EMA. Remember, this remains a buy on dip market. Yesterday the 8 EMA held at about 19,672 on cash, and the 20 EMA at the moment is at 19,438. I don't think so that the overall sentiment has changed in favor of bears, but the fact remains that a bit of a profit booking from 20,000 psychological levels to about 19,672, that's taken out about 328 points. It's absolutely fine. We had a fantastic rally of about 1350 points on the Nifty, and some of it needs to go back to the market as a gift, as a return gift, as we are also fond of in parties. So it's the cleansing process of the Nifty that's happening. We've seen a lot of stocks like ICICI, Axis, Kotak, especially, and HDFC Bank coming off their peaks. That's because sensible people have booked profit away. And I have always said profit in the bank is better than profit in the book. So bank your profit. And of course, it remains a buy on dip kind of a market till 10 EMA holds, and that's still away, Sakshi.
Okay, buy on dips and hold on to your profitable trades at this point in time. Let's also welcome my colleague Chetan Bhutani now. Of course, the big news from the auto space yesterday on Maruti Suzuki, giving news of recalling some of its models. Good morning, Chetan. So, what's the big news there? And help us with the kind of models that will be recalled.
Morning, Sakshi. Morning, Shailendra. Maruti Suzuki is actually recalling about 87,599 cars to check and replace the faulty steering tie rod of the hatchback, Espresso, and its minivan Eco. Remember, these units were manufactured between July 5th, 2021 and Feb 15, 2023. These are the time frames when the vehicles were manufactured. The company has further said in an announcement to the BSE that there's a possible defect in part of its steering rod. Remember, Sakshi, that the steering rod is an integral part of the vehicle as it ties the steering back to the steering gear. Sakshi, what really worries, is bothering here is that this time the recall is about for 87,000 vehicles, which is a huge volume. And this is, if I'm not mistaken, is the third recall in 2023. The first recall happened in January, second in April for 7,200 vehicles, and now this. So now we'll have to wait and watch if Maruti Suzuki officially, issues a statement on its recalls. But yes, this is a point of concern of recalling 87,000 units all at one go.
Okay, thanks a lot, Chetan, for all that update. Maruti Suzuki has had a good run so far in this year, 15% year to date performance as well, but concerns emerging on some of the models that are being recalled, and like how Chetan talked about, how this is the third recall of this year as well. So concerning factors, we are still awaiting the statement from Maruti. Let me now go across to my other colleague, Pavan Nahar also joins in, and staying on with the auto space. A whole host of earnings are waited from this space as well, and all eyes will be on Tata Motors as well. Pavan, strong earnings this time around for Tata Motors?
So Sakshi, Tata Motors is likely to return in black in the first quarter, and JLR's performance will be crucial for the auto major. So company is likely to report a strong performance in June quarter, thanks to good performance by JLR and passenger vehicle numbers. However, sequential performance can be, a bit subdued because of lower volumes from the commercial vehicle segment. So profit of Tata Motors is likely to be around in the range of 2,500 crores to rupees 2,900 crores, and some analysts are expecting around 3,000 crores of bottom line. And consolidated revenue of Tata Motors is seen in the around rupees 1 lakh crores to rupees 1 lakh 0.06 crores. And EBITDA margins may expand. Analysts are expecting EBITDA margins to expand around 400 to 600 basis points, and EBITDA is seen around rupees 11,000 to 12,000 crores. JLR volumes, as we know, are likely to be the key for the Tata Motors. However, and some analysts are expecting a flat performance from JLR business, excluding China JV. So yeah, that is all from my side. Over to you, Sakshi.
All right. Thanks a lot, Pavan, for all that update. All eyes will also be on Tata Motors. Then, of course, Tata Motors has been the top Nifty performer on a year-to-date basis. 62% of an uptick already on the stock. Will these earnings further provide some uptick to the stock is something that we will continue to watch out for. It closed yesterday in the green at the highest point. If you see on a yearly chart as well, it's trading at the high point, 629 or so, about half odd percent higher. Shail, what are you looking at in terms of the auto space? Of course, two-wheelers will also be in focus of the earnings expected today, Bajaj Auto especially. So the entire auto pack, is that going to be something that investors should be focused on?
Sakshi, auto's been in the demand for the last 6 odd months. The day the RBI governor said that there is a pause in the interest rates, we've seen a very, very sharp run up happening across the board on all autos and auto ancillaries. I would imagine frontline auto is overheated. That includes Tata Motors as well as Maruti as well as M&M, including the two-wheeler stocks, Hero Motors, Bajaj Auto, TVS. These are all overheated on the charts, at least. Of course, fundamentally they're doing pretty well. I would imagine Ashok Leyland still offers value.
Okay.
We also see some good traction likely to come in on escorts. So these are the two ones that I have in mind. Otherwise, auto ancillaries is the way to play the auto sector in a much better way. I think yesterday Devan Bhai spoke about Uno Minda. That's something to look at. And of course, if the markets correct a bit and Tata Motors DVR is available at a slightly lower price point, that's a better vehicle to track compared with the parent Tata Motors. You see a much more margin of safety in terms of sheer stock price differential from its previous high to what it is trading now. So 2 or 3 stocks: Ashok Leyland, Tata Motors DVR, and of course the auto ancillary space. Sakshi.
All right, Shail, let me also, welcome my other colleague, Akansha Chaturvedi now. She is going to be giving us all those insights that we heard from SEBI chairperson in the evening. Of course, very important decisions taken which will impact market participants. Akansha, take it away.
Good morning, Sakshi. Good morning, Shail. I hope you're having a good day. So the SEBI chief spoke yesterday in an out-of-syllabus press conference, and here are 5 things that we've listed down that we think would impact market participants. The first is that SEBI is working on simplifying the delisting process for listed companies. The SEBI chief said that the move was important since participants entering the listed market should also be able to exit it as well. The next issue that they're going to be tackling is the instant settlement in the stock markets. The regulators said that they are working with stakeholders to improve the timelines on transactions and settlements towards this goal is being done. The third important issue that they tackled was that the regulator intends to strengthen the rules of corporate disclosures related to insider trading. As we all know, it's an important issue. The SEBI chief said that they're looking to strengthen the rules around corporate disclosures. This is aimed to increasing the transparency in the trading of securities and ensuring that all market participants have access to essential information and are equipped well enough to make informed decisions. Another important announcement was from the mutual fund side. The SEBI chief also said that there would be T+1 redemption and allotment of mutual funds. This means from the current standard of T+2, redemption and allotment of mutual fund units would reduce to T+1, as in it would reduce to a single day. Then this topic is spoken a lot. The SEBI reiterated that the consultation paper on finfluencers is on the way. But here's an interesting point, Sakshi. The SEBI chief said that she or the regulatory body cannot go and curb individuals from giving stock advice to people, but they are trying to ensure that financial services companies, say for example brokers or mutual fund houses or other organizations, do not deal with such people who have clout, who have huge following and are not able to influence their decisions in that way. Back to you, Sakshi.
All right. Thanks a lot, Akansha, for that.
Okay, let's get back to what the market is. Let's get back to where the market is. Our guest for today is Mr. G. Chokalingam. He's the founder and managing director of Economics Research. Mr. Chokalingam has spent more than 3 decades in the market. He is an amazing stock picker, especially on the mid-cap size. And in the early part of 2000, while I was working with a global wire agency, Mr. Chokalingam was at Inam Securities. He used to track a very well-known Delhi company, and we used to meet often. Mr. Chokalingam, welcome to BTTV. It's so nice to see you. And let's start with your broader views on the market. How do you think sentiment is based on Dalal Street? And then we'll go into your stock picks.
Yeah, right now the sentiments are too good, but it gives me little nervousness on the market. Before going into market, thank you for giving me a good profile. Thanks a lot to you and your channel. Again, coming back to markets, I'm a little nervous, especially on the small and mid cap space, because today the market cap has exceeded 300 lakh crore and a little above GDP. And that I'm not worried about GDP ratio, but more worried on the liquidity front. Perennially, Indian market doesn't have much liquidity appetite in the short term. Yes, medium to long term, it is very strong. So what I mean is that even 1%, market cap comes to the market out of here, which is about 3 lakh crore. The market doesn't have appetite to absorb that even for a period of 3 months time. So that is why whenever there is some unexpected impact for the market, the small and mid caps fall very badly. Now the valuation also stretched. BSE Sensex trailing P is around 25.5, which is 300 basis over and above 5-year
Right, sir.
trailing. So therefore, it should be cautious.
Right, right, Mr. Chokulingam. Since you are such an amazing stock picker, and we've seen deep value still being available in the market, where do you think investors can at least focus their spotlight in the public banking space? What do you think looks affordable still, given the margin of safety in the stock price and valuations as well, sir?
Yeah, I agree with you. I mean, perfect statement you made. Whatever is a market condition, opportunities are plenty in a small mid cap stock in a selective basis. So, therefore, coming to your question straight, the one stock in the banking space I would present is Canara Bank. All of us know yesterday it has posted about 75% year-on-year growth in profit. What is amazing is that despite being a public sector bank, net NPA has come down substantially to 1.57% as compared to last year 2.48%. Amazing, and the stock trades less than the adjusted book value. Adjusted book value as of June 30th comes to 351, which is discount to, the market price is discount to this adjusted book value. And provision coverage is about 88%. It's amazing. And I am not giving any valuation for the subsidiary and associates. In fact, profit from associates have gone up by 35% year on year in the latest quarter. So I have given a target of 376. I'm pretty confident that unless market conditions worsen in the short to medium term itself, we can reach this target price.
Mr. Chokalingam, getting deeper into Canara Bank, where else, we've seen the company do a record high of something like 850 rupees and a QIP of about 150 about 2 years ago. At the moment, at about 389. Where do you see the stock going, say, in the next 6 odd months? And how would you advise investors to get into Canara Bank via SIP?
Yeah, so at current price itself is a very good buy in terms of valuation. I have given a minimum 376, but it can go beyond that also depending upon the market condition. Canara Bank, it has got about 7 subsidiaries. It has got AMC business, insurance business. Then it has a holding in Canfin Homes. So there is unlocking possibilities from some of these subsidiaries. Already they mentioned about possibility of listing. So that would be a major trigger in the short to medium term. So and also the industry tailwinds. The industry is growing at 16%, which is a 10-year record high. Canara Bank also picked up growth from single digit to 14.5% growth in credit base. So all this would give a very good trigger in the short to medium term itself, and it should take it to 376 rupees.
All right.
Okay, and here's an advice for some investors who are deep into the stock as far as Canara Bank is concerned. Please also look at the investor profile of Canara Bank. You'll find some very interesting names coming there. Apart from Canara Bank, Mr. Chokalingam specializes in buying deep value stocks, and one of them is a manufacturing company in the cement space. Mr. Chokalingam, what do you think is attractively priced at that level?
Yeah, very interesting question and interesting stock. KCP Limited. This company I've been tracking since 1992. It's amazing company. The management quality is very good and balance sheet is very strong. It has got a net cash of around 31 crore. It is asset-rich company. Most important is that it's a diversified company engaged in cement, sugar, hotel, and engineering. Last few days we are seeing the talk about possible acquisition of Sangi Industry at an enterprise valuation of 6,000 crore. My calculation gives the proposed value of that deal. If at all if it happens, I'm not recommending that stock. I'm not believing in acquisition. I'm just saying the kind of valuation discussed in the market is around above $100 per cement capacity, per ton of cement capacity. Now, coming back to KCP Limited, If I give $50 per ton for its 43 lakh ton capacity, that itself can give you 20% upside from the current year. Not only that, it has got a 11,000 TCD sugar plant in Vietnam. It is very interesting to know that the international sugar prices are up around 24-25% year on year basis, and it is highly profit making company. Plus, in my knowledge, this is the only company I've come across in the mid cap space. It has five sources of electricity generation, whatever you can think of: thermal, tidal, wind energy, solar energy, energy from waste recovery. And apart from that, it has got a hotel in Andhra, Telangana, and 128-room hotel. And then it has got a big land parcels in Chennai. It is part of loss-making engineering plant. And promoters have got less than 50%, and they have been buying little quantity from the market. And if you see the investor profile also, that gives you a lot of confidence. And the only risk is that if market falls, the stock may fall 10-15%. But if by any chance it joins any hostile takeover or any friendly takeover, I'm not forecasting that as an analyst. I just have a visionary statement that then the stock can be a phenomenal multi-bagger. Even otherwise, as and when the cement industry improves its prospects in Telangana, Andhra, this company definitely get this target price easily, and very good management, and therefore I am recommending. And also, personally, I just started investing in KCP Limited. I hold the shares in KCP Limited.
Wonderful. The other point that I wanted to highlight about KCP Limited is that the revenue is still far above the market capitalization. For a profit-making company, that is one sure sign of undervaluations. We've discussed two stocks, KCP Limited and Canara Bank. Of course, if you are trying to take a position in any of them, follow the SIP method, and also do consult your financial advisor before taking this step. Remember, these are undervalued stocks, and there are times when undervaluation remains for a longer period in the market than what your financial flexibility is. So with that caveat, Sakshi, what are you looking at?
Mr. Chokalingam, I wanted your views, since you also said that Canfin Homes is on your radar. I wanted to ask you on PFC as well. This stock is currently trading at lifetime high levels as well, and it has on the daily charts, after retesting the channel prices, given a breakout on the upside as well. If you could also help us understand your views on the finance space.
Yeah, Canfin Homes, you are talking about Canfin Homes, right?
PFC, since you said that Canfin Homes is something that you're watching out for, I also asked you on the PFC counter too.
Yeah, basically I am very underweight on the PSUs largely because for regulatory interventions, and so therefore I'm not able to give any strong view on PFC.
Okay, got that. Shail, anything else you wanted to discuss? All right. Mr. Chokalingam, another thing we wanted to discuss right before you joined us, we were discussing the auto space. Of course, Tata Motors is going to be coming out with its results. Phenomenal rally we've seen on the counter on a year-to-date basis, about 60-62% uptake. The company is expected to come into black this time around. We've seen M&M perform very sharply over the last 6 months or so as well. Your own thoughts as far as the auto space is concerned? Anything that you like at this point?
Yeah, certainly one can look at Maruti and then M&M. I am not that bullish on Tata Motors because, all of us know, while Indian GDP is expected to grow fastest, Europe has already reportedly slipped into technical recession, and the growth in US also slipped down. And Chinese GDP growth also was below expectation if you go by the latest quarter. So therefore, the global businesses should be under pressure. Like, it will not be like Tata Steel, but the pressures of global business will be common for many. So therefore, I would recommend Maruti. I'm pretty confident of Maruti improving its SUV segment going forward. It has already done very well in the last month also, and then followed by M&M. These are the two top picks in the auto space.
All right. Mr. Mr. Chokalingam, another thing that I wanted to discuss with you ahead of the earnings today, of course, Asian Paints, L&T, Bajaj Auto. We've discussed the auto space, but these two counters, do you like any of the counters at these current levels as well? And
One
what are your
can have,
expectations from the
yeah,
earnings
one,
too?
yeah, one can continue to hold L&T. I am not that bullish on Bajaj Auto because we have seen the kind of the pressure coming from export of two-wheelers. And in EV also, Bajaj Auto is not able to be the top performer. The competition is getting intensified in EV business. So therefore, I would prefer L&T among these three stocks you have mentioned.
Okay, understood that. Let's talk about the pre-open trade. We already have the index levels as well. There's a mixed opening that we can see. It's still settling up. 124 points higher on the Nifty at 19,766, 84 points right now. The Sensex is at 66,503 at this current levels as well. But it will take some time for the markets to settle in. The Nifty currently at 19,721. Let's continue to look at some of the stocks. Let's look at ITC, for example. That was the stock that declined about 4.5% yesterday after the demerger news. Let's see. So it's a recovery of sorts in the pre-open trade, 492. 4.3% uptick for this counter in today's trade. Shail, anything else that you're spotting?
Yes, actually, as of now, Nifty's slipped back into the red, down 33 at 19,627. That's how it is. I won't tell you the price on Reliance Industries. That's a bit of a disturbing price that's coming in. Let's settle down. Now down about 0.5%, 2487. Let's look at Infosys, down 0.5%, 1330. Let's look at Kotak Bank, flat at about 1894. Hindustan Unilever flat at about 2579. That's how prices are there on the Nifty 50. Let's look at the F&O space and see where action is clocking in. Let's look at good news. Bank of Baroda, 3.5% higher, 206.40. The stock at a fresh 4-year high here. GMR Infra, 4% higher, 48.40. This is the third day in a row while we see interesting rallies happening. ITC sort of recouping a part of its losses made yesterday, 2.7% higher, 484. Canfin Homes, there is no let up in the rally, now up flat at about 890. Power Finance Corporation, Sakshi touched upon this, 1.4% higher, 243. ICICI Bank, 1.8% higher, 1011. So these are the gainers that I see on the F&O space. Nifty gyrating now, up about 108 at 19,780. We'll let this settle. On the losers side, you have Maruti flat at about 0.7%, down 96.24. Remember, the company is recalling some 80,000 vehicles. Bharti Airtel down 0.5%, 882. Infosys, Tata Steel in the green, in the red, and of course Tech Mahindra flat at about let's say 1160. Broader markets where the sentiment is really good and it's not concerned where the Nifty is headed. It's actually very strong rally in SGVN, up 17% at 6690. Fresh record high. The company's got 5 new orders, and that's really changing the sentiment and the complexity of the stock. Record high here. Policy Bazaar up 2.5%, 763. I'm talking only about high beta counters. They define the sentiment and the trend. Canfin Homes now crosses 914. Mr. Chokalingam alluded to it. 2.8% higher. KPIT, ICICI Bank, all in the green. So actually, this is what I see. Nifty up 84, 19,757. Good news coming from the large street. What are you watching?
Absolutely, Shail. A whole host of other heavyweight movers. IndusInd Bank. Let's look at that counter, for example. The stock closed at 3-year highs yesterday. So let's look at that. That's a bit flat today at 1435. Apart from that, let's also look at some of the big movers of yesterday too, if they're continuing that move today. Let's look at Inox Wind, for example. That showed some kind of a breakout on Inox Wind. Of course, Cochin Shipyard, that is another stock that was looking good on the screen yesterday. Fresh 52-week highs we had seen on Ashok Leyland. Shell, you had mentioned that stock. Colgate, Grasim. Let's look at those counters as well. So you're looking at some moves on that front too. Ashok Leyland 1.5% high in trade. Colgate up 0.5% as well. Let's get our guest on the show now. We are now joined by Sudeep Shah, Deputy Vice President, Head of Technical and Derivative Research at SBI Securities. Good morning to you, Mr. Shah, and thank you so much for taking the time out. Well, the pre-open looks brighter than the last two trading sessions. Your thoughts on the markets? What are you watching out for?
Yeah, good morning and thank you for having me on the show. What has happened yesterday and day before yesterday is that we've seen some kind of a cool off from higher levels. Now, then that's quite obvious now when we have approached almost 20,000 and you get some results like we've seen in case of Infosys, Reliance. So there is bound to be some kind of a disappointment. Yesterday, ITC also spoiled the show somewhat. So we have and what that has done is that Nifty has come back to 19,650, 19,700. It might consolidate here, spend some time here. We may see some kind of a sectorial rotation churning and then get ready for another leg of an up move. So I feel that the last 3 days, while we've seen some kind of a profit booking from higher levels, that's in fact healthy. And I see supports coming for Nifty at 19,550, 19,530 odd zone. On the upside, 19,730, 19,760 will be the first resistance, and above that, once again back to 19,900. So maybe today we might spend some time between 19,600 and 19,750, consolidate here, and then once again get ready for an up move up to 19,900 post that.
Wonderful, Sudeep, and welcome to BTTV. Let's discuss some low-priced counters which our investors would definitely want to sort of at least look into the charts. You do a very serious job on the infrastructure space. What do you think about BHEL? This stock is actually now at a 5-year high and is now trying to claim the 3-digit mark. BHEL for you.
Shailji, what we have seen in case of BHEL is that there are two things that have happened. We've seen the entire capital goods space move. At that time, BHEL did not move, but in the last 3 to 4 months, the entire PSU pack has moved up. Whether you say railways, whether BHEL, REC, PFC, the CPSE index itself. So there's been a big positive momentum in case of these PSUs and with the kind of results they have started announcing in the last 2 quarters. So now add to that the technical charts. Now these stocks, like specifically if you talk about BHEL, this stock has been consolidating and then making up move once again consolidating. So the trajectory is shifting higher. What we are seeing is the daily, weekly charts are improving. The stock yesterday has closed at 98, 99, which is the highest level. I feel, say post 4-5 years. 2018 was the last time, January 2018, when we had seen 103, 105 levels on BHEL. Post that, now after a 5-year time period, this stock has broken out and it has broken out with volumes, and we have seen some serious open interest built up in yesterday's session here. So also, if we see the rollovers that are happening, the expiry -3 rollovers, there has been a significant jump in the 3 rollovers also. So I feel that this stock from the current levels can move to 105, 110 levels, and we can keep a stop loss of 93 for the same.
Okay, let's get Mr. Chokalingam into discussing BHEL. Of course, yesterday's data on BHEL, the open interest was up 7%, and Sudeep is absolutely right. The price that you see on BHEL was last seen in 2017, 2018. Mr. Chokalingam, would you find BHEL attractive at current levels?
Sorry, I have not looked at it, but perennially it has a problem of receivable and inventory. Definitely, if working capital management has improved in the sense, in the past it used to exceed annual sales, inventory plus receivable. If this company is able to improve and that ratio is less than 50-60%, then one can definitely go and buy BHL.
Okay, this is the view on BHL. The price that you see, 98.70, has been rising fairly sharply. If you see the price in the month of June, it was at somewhere like 68. The price on 5th of April was 68. So 68 to 98, a one-way rally. And Mr. Shah says that you'll see better days on BHEL. Let's get deeper into stock picking, Sudeep. And apart from BHEL, you've also mentioned BEML, another government company, and of course on the defense space. What attracts you to BEML?
Shailji, what we've seen in case of BHEL yesterday and day before yesterday, now what the stock charts are indicating is that lastly in the September 2017, 1500, 1560 was a resistance. Again, the same resistance was 1650 in 2021 December, similarly in September 2022. Now this yesterday's and day before yesterday's price move has ensured that we've crossed all these three resistances and the stock is at its highest level. And the kind of momentum that we are seeing in these defense names, slowly and steadily, I feel that this stock was undervalued. The stock did not move too much. But now when all these PSU names are moving, I feel this time with the kind of setup on the daily, weekly charts, if we see even on the daily and weekly charts, the stock is sustaining above its 200 DMA, also has crossed all its major moving averages on the upside, and it's now above all resistances. So I feel that with the delivery based data in the last 2 days also is indicating that there's some serious accumulation that has already happened, and now we are ready for an up move. So from here on, I feel 1730 will act as a strong support. It can be bought with a stop loss of 1730, and on the upside 1930, 1950 are the levels that one could eye for.
Okay. Mr. Shah, if you could also mention your take on NHPC, since we're talking about the PSUs, strong move yesterday as well on the counter. Your thoughts here for today? What are you looking at?
All resistances to the November 2022. Since then, the stock had been consolidating in a range of 38 to 45, 46. However, in the last 1.5 years, the stock has never broken its 200 DMA, despite any selling pressure in the markets. The stock has not broken its 200 DMA. As well as now, the stock is holding well above its short-term 20-day exponential moving average also, and now it's heading upwards. So with the kind of trajectory and the structure on the daily and weekly charts, I feel that the stock can move towards 60, 62 levels, and one can buy this on dips with a stop loss of 46.
Right. Let's again look at the pre-open trades. They've settled in favor of green. Nifty up 57 points. And I'll tell you what is it doing in terms of index heavyweights. Let's see where all do we have a green tick in the heavyweight side. Okay. SBI up 0.67%, 621.80. Axis Bank up 0.6, 977. We have a green tick on LNT. 2616. Apart from that, wow, ICICI Bank, Reliance and HDFC Bank in the green, 0.7%, 0.3 and 0.3% higher. ITC is in the red, that's not a problem, 0.7% lower, 467. I am keen on Infosys and TCS, a nice green shadow coming across the market. So all the top 10 stocks, the banking space, the heavyweight Reliance space are in the green, and the lean problem is ITC, which actually isn't much of an issue. So the dip that we saw in the past 2 days seems to be getting bought into. Sudeep, your first thoughts on how the pre-open has shaped up? Anything that you like interesting on the large cap high beta side within the banking space?
Shalji, if we see within the banking space, in the large cap zone, I feel Axis Bank in the last few days has been consolidating and it's getting ready for a up move. So the stock has been holding well above its 13-day exponential moving average on a daily chart. So, and the stock is not breaching around 950, 955 levels on the downside. It has been consolidating between this 950, 975 zone.
Nifty IT index has opened in the red, down 41 at 2980. This is how the index has shaped up. Let's look at the index heavyweight space and find out what are the stocks that are helping this index in the green. Okay, it's Bajaj Finance up 0.6%, 76.25. SBI, ICICI Bank and Axis Bank in the green, 0.5% higher on each of them. HDFC Bank is in the green, 0.3% higher, and Reliance is flat. Kotak is recovering after a very strong drubbing that it saw yesterday post its stellar earnings. Let's move to the F&O space. What are the stocks that are gaining ground? Shriram Finance, 1% higher, 1813. TVS Motors, I'm looking at high beta as of now, 1% higher, 1320. Hero Motors up 1%, 3170. Tata Motors ahead of earnings, 1% higher, 636.65. And M&M Finance, these are all high beta counters, up 0.6%, 323. Market in the green, Nifty Bank taking it away, 177 points higher, 46,101. Nifty 19,700, 20 points higher. Let's look at the Nifty 500 space. SGVN, no stopping, Satluj Jal Vikas Nigam Limited, 10% higher, 62.40. Fresh record high, top gainer in NSE 500. JK Paper, sterling earnings up 5%, 328. Sugar stocks continue to shine forth, 2% higher on Triveni Sugar, 324. And of course, how can you forget the defense space? Ladies and gentlemen, we have a different take on Masdog. Now above 2,000 rupees, up 2.3%, up 44 points. Cochin Shipyard up 11%, Garden Reach Shipyard up 15 rupees. I'm so sorry, the percentage rises 1.6 and 2.5% respectively. So that's how it is, Sakshi. The entire high beta space is in the green. Nifty Bank and Nifty are in the green. It's a very good start to a Tuesday morning. Sakshi, what are you watching?
The steel stocks are moving higher in trade. Shell today, Hindalco, JSW Steel, these are the counters that are moving higher in trade. You did talk about Tata Motors. Along with it, we are looking at the two-wheeler majors as well. Hero Moto, Eicher Motors, all of them are up in trade. Let's also look at TVS Motors, for example. That's also going to be reacting to the numbers right there, reported stellar numbers. So 1.2% uptick on that ahead of numbers. The auto pack will be in focus. Apart from this, let's also look at so Bajaj Auto slightly up in trade, about 0.3% ahead of earnings. We're also looking at Hero. Let's look at that counter as well. Apart from that, let's also look at the FMCG majors. Britannia, Nestle, they are also up in trade as we speak right now. You know, we've been talking about a lot of housing finance names. PSB Housing is now up in trade. We're looking at that counter too. Cement majors mentioned earlier by Shell, Ultratech, Grasim, both up in trade as well, Shell.
Yes, Akshay. So it's a nice sea of green across the board. The top gaining index is metals, as you rightly pointed out, 64.47. Let's get our panel in. Sudeep, you first. A nice green tick on the Nifty. What are you looking at?
Shalji, now that Nifty is now able to manage and stay afloat above 19,650, 19,670, I would still give it some time in the next 20-30 minutes. I feel Nifty still has to hold 19,650 for us to at least take a call, then at least be confident that this move is not flash in the pan. This rebound rally can sustain. So 19,650 for me will be very crucial in the next 30 minutes.
Yes.
That is sustained, then we can expect the Nifty to move higher towards 19,730, 19,760 for the day.
Okay.
Okay, and at this moment, if the PCR can fire the BHEL stock up 1%, as was pointed out by Sudeep, he's seeing value at these levels. 98.95 is what I see. Apart from BHEL, the entire government pack is up in the green. All stocks below 100, and this is what you're going to enjoy. So, Steel Authority 90.7 up in the green, NBCC 42.80 up in the green, NHPC 51.35 in green, and NMDC 111.95. All these stocks, deep value stocks, where the dividend yield is also fairly substantial, is what the market is looking at. So at one side you have frontline blue chips which are pausing for breath, and at the other side defense, PSUs, PSU banks, and of course the entire PSU basket on the energy side, especially the hydroelectric power side, up in the green. Let's get Mr. Chokalingam into the discussion. Mr. Chokalingam, you watch the market on a daily basis as well. What catches your eye for Bank Nifty up 120?
Yeah, but I firmly believe that it cannot hold. I am expecting at least another 3% to 4% fall in both the Nifty and Sensex in the couple of weeks itself.
Okay. Let's also look at a whole host of real estate stocks that are moving in trade. Yesterday also we mentioned them, Lodha, Aburoid Realty, Prestige Estates, DLF, even Mahindra Life, all of them are up in trade as well. Mr. Chokalingam, do you have some coverage on the real estate space as well? Do you like this space?
We had coverage successfully closed on Oberoi Realty, but if somebody wants to still buy or evaluate the real estate stock, I would suggest that in this market, just evaluate only DLF and Oberoi kind of stocks, which have got a decent balance sheet. Otherwise, most real estate stocks are at peak. The other one stock indirectly related to real estate is Nesco. We have invested, my family, economics. That is the only stock in the real estate space indirectly. I am extremely bullish. I have come out with a report saying that this is a next generation stock based on its past performance and the land bank in Gurugram and cash position and management ability to scale up the capex and convert the land into cash making machine. So I am extremely bullish on Nesco.
One of those deep value stocks, Sakshi, which have this wonderful, I think 33 acres of property on the main Western Express Highway. It's used as an IT park as well as an exhibition ground. Deep value there and a fantastic pick, Mr. Chokalingam. Let's get back into the markets. A lot of prices ticking. It's 9:23. And it's an amazing screen to see, Sakshi. Midhani, another defense play from the government space, 318.80. Let's get Sudeep into this. Sudeep, you discussed BEML, Mishra Dhatu Nigam Limited. Anything that strikes you in that chart? Because this is one defense space that hasn't moved as yet, apart from the fantastic rally that we've seen in shipyards, that we've seen in stocks like BEML, BDL, and BEL. Mishra Dhatu.
Shali, now this stock, Midhani, from April, if we just see the stock from March end or April, from 180 it has moved to 320, almost in a space of less than 3.5 months. But in the last 8 to 9 sessions, we have seen this stock. After that big move, in the last 8-9 days, we have seen this stock consolidating between 300 and 310 on the upside. So what today's price action is ensuring that it is trying to break out. Also, the structure is very good technically. So I feel with the kind of tailwind that we are seeing in these names now, all these names are seeing a good action. This can be bought at the current levels or on dips with a 305 kind of a small stop loss. And on the upside, one can look at a move up to 338, 343 in the next few sessions.
Okay. Mr. Chokalingam, I also wanted to get in your view on the
The
pharma pack as well. On say stocks like Dr. Reddy's, Sun Pharma, both at 52-week high levels. Some of the counters like Cipla are also moving in trade. Aarti Drugs, that's a stock that has really moved very, very sharply. From the pharma and healthcare pack, is there anything that you like at the current levels?
Yeah, I think this is a time to have some exposure to pharma because, as I said, I am very negative in the short term on the market. So one can hold on to things like Dr. Reddy. Singapore is very attractive. If you give three times, enterprise three times value for the domestic business and just one time for export business, that itself gives me the the potential target price of 389 for Indoco Remedies. We have officially buy rating on that. It is worth noting that in the Indian market, the exclusive domestic formulation branded companies, they trade at as high as 6 times enterprise value to annual sales. So even if I give 3 to 4 times, then for the domestic business, which is about 50% of the total business for Indoco Remedy, that stock can go even beyond 389. So this is one stock which I like most. We personally do not have any stake in Indoco Remedies.
Let's discuss Indico in a bit of detail, and of course, Sudeep will give you a technical view on it. It's a stock that has appreciated very well, about 17 to 18% CAGR over the last 10 years, handsomely beating the S&P Healthcare Index, which has appreciated about 11% CAGR over the last 10 years, and of course, the small cap index at about 19%. If Mr. Chokalingam, you could share the kind of portfolio that Indoco has. You've mentioned that you see deep value here, market capitalization at about 3,000 crores, and the top line is fairly significant as well. What does Indico actually do?
Yeah, it is engaged in various therapeutic group. Honestly, I have not come back with that preparation of micro. Of course, I did study thoroughly. I came out with the report.
Okay.
And, interestingly, the one biggest reason to pick up the stock is that it is now very close to 52-week low. And it has got a strong balance sheet. So these are the triggers. And some of the brands, it is in, even top of the ranks. So that's what triggered me to recommend this stock.
Yes, sir. So the company is into formulations and of course active pharmaceutical ingredients. And what is the most interesting brands that they have is a capsule called Carvol Plus. So when you have that asthma feeling and you warm up a nice pot of water and put that green colored capsule into that concoction and take that breath in, that's manufactured by Indigo. Let's get Sudeep into the discussion. The 52-week range for the stock is 306 and 423. Mr. Chokalingam did mention that the stock is around its 52-week low. Sudeep, anything that the charts talk to you about Indigo Remedies?
Actually, the kind of chart structure that the Indico Remedies stock is displaying right now, I feel it is a lower high, lower low kind of a chart formation, and on charts as of now it is negative. However, what is important is that the stock is right now holding its important support of 305, 310 levels, which it had last witnessed in September 2022 as well as April 2023. April, May 2023. So this zone of 309.10 is very important. The stock is around its 50% retracement of its previous move from 145 in November 19 till say 470, 480 in August 2021. So the stock has retraced fair bit. But for me to spell a buy on this, I feel the stock has to cross and sustain above 345, 350 levels, at least in the first place where the 200 DMA is placed. So while the pharma index, while all the other pharma names are well above that 200 DMAs, this stock has underperformed not only its own sector but the overall markets and the broader indices as well. So I feel that this for a first sign for us to understand that this stock is now trying to overcome its underperformance. The first milestone it has to cross its 345, 350 levels where the 200 DMA is placed. and it should take out that prior resistance, swing resistance. Then at least a bottom, we can be ensured that the bottom has been formed for this stock. So overall 305 will be a support, and I feel that a crossover above 350 is essential for us to spell a buy on this.
Okay.
Sudeep and Mr. Chokalingam, that's the beauty of having a top-end fundamental investor on one side and a technical expert on the other. The fundamental person will buy deep value and sheer pain in the stock price, and the technical guy on the other hand will like to buy momentum. So these are the views that are there on Indigo Remedies, and an opposing view actually makes it a little more interesting. Mr. Chokalingam feels that Indoco Remedies offers great value at this veil. At the moment, the charts are not, how should I say, talking that well to Sudeep, but that's a decision that you have to take. A good fundamental stock available at a price point that's close to its 52-week low. Sakshi, what else are you watching? I see on the screen that Nifty is now flat at 16 points, still in the green, 19, let's just say 690. And the other interesting things that I see on the screen in the Nifty are that Bajaj Finance, of course, continue to tick up. Let's get Sudeep on ITC. Secret Major, a bit of a disappointment there on the corporate announcement, second day of losses. Where do you see support coming in, Sudeep, for ITC? 458 now.
Shelly, now the next post yesterday's fall in the follow-up action today that we're witnessing in the price. I feel that the stock has given up its entire up move that it had witnessed right from 30th June from the levels of 450, 455. So the next support I see is somewhere around 432, where there was a swing low on 12th June, 432, 433 levels. So that zone is very important for me. I feel that 430, 432 will be very crucial in the next few days, and even in the next month's option data, if we see, there is a good bit of writing in 440 puts, 430 puts. So if we just analyze that data, then 430, 435 will act as a strong support from the next series perspective in the next 5-7 days.
Okay. Sudeep, I wanted to discuss with you the paper stocks, especially JK Paper. Positive earnings and the kind of movement that we've seen on the stock is very sharp. 6.5% move on the upside on the stock today. Your thoughts on JK Paper, and are there any other stocks also from the paper pack that you'd like to add to the list?
See what has happened with these paper names, whether it is JK Paper or West Coast Paper. In the last 7-8 months, these stocks have been on a downhill. Now the stock, but however, the corrections are not bigger than 30-35%. Now, if we see the quantum of the moves in all these mid caps now, 30-35% also will be a small number in the last 1 year, like the way we have seen all these mid caps move up. But and on a longer term time frame, that if we see, the stock has moved from 80 to 440. So this move to 300, 320 on the downside in the last 6 months is a mere retracement that I feel. And the stock is now getting ready. We are seeing some kind of accumulation in the last few sessions, last few months, in fact, between 330 and 310 on the downside in case of JK Paper. The stock today has crossed its 50-day moving average, and it is crossing it with volumes. So I feel another couple of days, even if the stock builds a base here between 320 and 330, I feel from the current levels, the risk reward ratio is in favor, and this can be bought with a 315 stop loss and a target of somewhere around 358 to 365.
Okay. Sudeep, also from the large cap banking
Okay, Sudeep,
space.
the big boy.
Sure, Shail, continue please.
Yes, actually, go ahead.
Okay, so Sudeep, I wanted to discuss with you the HDFC Bank counter as well. We've actually seen, the stock breaking weekly high as well. At these levels, would you consider buying the stock? Any targets that you'd like to share?
Of course, now when we are talking about Bank Nifty, and in the last few sessions, while we saw some kind of selling pressure in IT, now the only index which can compensate for that fall in IT is the Bank Nifty. And the results have been fairly okay. It's not that the results have been bad, or they have been better than expected. In case of yesterday, in case of even IndusInd Bank, we have seen, so HDFC Bank, IndusInd Bank, ICICI Bank, all these banks have given out good numbers. So what I feel is that if you see HDFC Bank, it has been consolidating in the last 3-4 sessions between 1670 and 1690 on the upside, and once again today we are seeing some kind of a positive price action, and the stock is holding its last 2-3 days low of around 1670. So if you till the time the stock holds this low of 1665, 1670 kind of range, we can see a up move in HDFC Bank up to 1720, 1725, and post that if it sustains above then a bigger move could be on the cards. But as of now, a small trade, 1670 stop loss, and 1715, 1720 targets, I feel can be achieved in the next 2 to 3 sessions.
Okay. Mr. Chokalingam, your thoughts on...
Okay, another.
yeah.
Sakshi, let's just do some stock picking at the moment. If we can see the price of Manappuram Finance on the screen, let's get Sudeep into this conversation. Very high volume on the FNO space here, and the top gainer in the Fin Nifty. Also, its weekly expiry today, 129.55. It's been a disappointing stock for a very long while, Sudeep. But what are the medium to longer term charts talking to you on Manappuram Finance? Open interest up about 12% today, and strong delivery patterns also emerging. Long build up happening here.
Shalji, what we're seeing on the long-term charts is that first there was a big fall from 200, 210 levels in November 2021, and even in a period of less than 6 months, the stock had halved. It went. We have seen a low of 80, 83, 84 levels on the charts. Now from there, in the last 1 year, there has been a higher top, higher bottom formation on, although the candles have been small, although the range has been small between 100, 130, and we have even had sharper falls in between. But that is a classic sign of a stock being accumulated, a panic being created. And if we see the pattern, the formation in the last 25 to 30 sessions, there has been a good amount of accumulation happening in the stock. And the highs are now and the lows, we are seeing higher lows on the charts on smaller term time frame charts. So I feel from the current levels also the stock is it might not fire up too fast. It might not we might not see a rocket move in this stock, but steadily we will see this stock heading towards 145, 150. We might it might require some kind of a patience because this stock is not moving like other NBFC names. But overall, the quality of the stock is good, and the charts are indicating that we might in the next few months head towards 145, 150, and the supports are at 122 on the downside for the same.
Okay, let's get Mr. Chokalingam into this discussion on gold non-banking finance companies, and at the same time Sudeep will at that point of time talk on Muthoot Finance. Mr. Chokalingam, we've seen both these counters, Manappuram and Muthoot Finance, trading well below their 52-week highs at a time when there is almost a party happening in the financial Nifty space and the NBFC space. What are your views on these two counters, Muthoot and Manappuram, and where do you find value in these two stocks?
Yeah, I think this is a very good time to sell both Manappuram and Muthoot Finance, because there is very important structural change happening in the business. The gold business now, there is aggressive competition from the banks, not only from the private banks, even from the public sector banks. Look at the way the Canara Bank yesterday reported. They have reported a 26% jump in the the credit given to gold, against the gold loans. So even HDFC Bank has multiplied the number of branches which cater to the gold loan segment. It is now more than 1,000 branches, if my memory is right. HDFC has set up. So across the board, if you look at private banks and POC banks, everybody is jumping into the gold loan segment. And let us not forget the fact that the banks have got access to public deposit, which is cheaper, and more than that, they have got access to CASA deposit, low cost deposits. And most banks now they have anywhere around 30 to 50% exposure to low cost deposit. So no way the NBFCs can manage to beat these banks' entry into the gold loan. So therefore, understanding the structural change as a student of economics, I would say that this is a good time gradually in a phased manner to sell these gold loan companies as the valuation gets a little stretched.
Okay, that's the fundamental view coming on Manappuram and Muthoot. But let's touch base with Sudeep. Sudeep, Muthoot Finance for you, 1301. What are the charts saying?
Shailji, Muthoot Finance, I feel is a very good chart now. The daily, weekly, monthly, all charts in the last few months now we see it's bullish, and the stock has it's almost on the cusp of a breakout. Like what we've seen, there was a big fall in case of Muthoot also, like was in Manappuram. November 2021, the stock from 1710, it had crashed up to 925 in March 2023. It's just 4 months. But in the last 4 months, the stock has recovered 50% of the fall. So that speaks about the kind of momentum that the stock has started having. And also, we've seen some kind of a cool off in inflation, also in the interest rate scenario getting eased. Now, the expectation of a ease in interest rate going ahead because of the cooling off in inflation. So this kind of environment has been, I guess, the price moves have been backed by this kind of environment, and from the current levels, also I feel the stock is looking good. Even at higher levels, we are seeing some kind of a good addition of long positions in this. And from the current levels, I feel 1260, 1270 will act as a good support, and we might see levels higher up to 1370, 1380 in the next month or so, in the next 10 to 15 sessions. So in the month of August.
Wonderful, Sudeep. Thank you for joining us. And your two picks for today, BHEL and BEML, both of them doing fantastically well. BHEL up about 1.2% at 99.20 within kissing distance of the 3-digit mark, and BEML up 1% at about 1785. Thank you for joining us, and I hope you become a regular on the show with your fantastic calls on derivatives as well as charts. Thank you for joining us. Over to you, Sakshi.
Right, Mr. Chokalingam, let me discuss with you the AMC pack as well. The HDFC AMC stock, for example, that's showing some kind of a long build-up. Of course, it's among the top gainers as far as the FinNifty group is concerned. They have no space as well. And the UTI AMC stock as well is in focus. In the last 1 month or so, we've seen about 19-20% odd of move. Your thoughts here?
Yes. Although I am a little nervous on the short-term outlook, I am extremely bullish on medium to long-term outlook of India. Therefore, if I am so optimistic on the market, I have to be optimistic on AMC, industry as well. That's my logic. And within that pack, we have recommended Nippon Life. Of course, after we recommended, it has gone up. Still, I think there is a possibility of 5 to 10% upside. And also, one can look at the HDFC AMC stock. Both these stocks, from the medium to long term perspective, I believe you have a significant upside potential.
Okay. Shail?
Right, let's take a look at the market now. We are at 945, Nifty flat as it can be, 14 points higher. Nifty Bank flat as well, 75 points higher at 46,000. Sakshi, what's really taking the game away today is the defense pack, and I can't but help again repeatedly pointing out Masdok, now comfortably above the 2000 rupee mark, up 70%, 70 rupees today, 3.5% gain. Midhani is doing well, 3.5% higher, 316. Garden Reach Shipbuilders, 2.5% higher. Cochin Shipyard up a percent. The entire space is really up in the tick, as well as the entire PSU basket. You just name it. Steel Authority 9150. You've seen a strong traction coming in into NMDC 112.30. All these prices are just taking it away when it comes to deep value. The market really bouncing off PSUs over an extended period. And just very shortly, we are going to be joined by Mr. Baldev Prakash. He's the Managing Director and Chief Executive Officer at JK Bank. Very interesting chart there as well. And what is State Bank of India to the wider corporate environment in India? The same position is held by J&K Bank in the state of Jammu and Kashmir. We'll wait for Mr. Baldev Prakash to join us, but at that moment, let's see what the stock is doing. At the moment, J&K Bank right there up on your screen. Sakshi.
Absolutely. We do have Mr. Baldev Prakash, the MD and CEO of J&K Bank with us. Good morning, sir, and thank you so much for taking the time out. Well, the bank has nearly doubled its net profit to 326 odd crore rupees for the first quarter of FY24. From 166 crore rupees year ago as well. We've seen the asset quality for you also improve, with the gross NPS declining to 5.77% from 9.09% last year. The net non-performing assets also dropping about to 1.39%. First up, my question to you is, as far as your NII growth is also concerned, you've shown a 24% rise to 1283 crore rupees. What is the visibility here? And on the asset quality front, is there further room to improve this further? Sir, could you unmute yourself, please?
Yes, good morning. Sorry. So as far as net interest income is concerned, we have registered a very healthy growth, and that is 17%. Generally, in the first quarter, we expect little subdued growth, but this quarter has been exceptionally good. And based on the quality of loans and side by side, the recovery in the non-performing assets, we are expecting a good net interest income growth and good margins.
Sir, welcome to Business Today Television. A couple of things on the broader macro picture I wanted to ask. We've seen a dramatic change in the political landscape of J&K happening over the last 4 years. How are you measuring a similar change on the ground up level? Are you seeing an increased amount of demand for corporate loans? How is your retail portfolio doing given the political changes that have happened in your state?
Yes. So, Jammu and Kashmir, the state itself is transforming, I'm telling you. And a lot of improvements in the sentiments of the business, lot of improvement in the tourism sector, which is actually the sector drives the economy of the state. Last year, the state has witnessed 1.8 crores of tourists inflow, and this year the expectations are that it will touch 2 crores, more than that. And once this segment of tourism, this impacts everything, including the corporates, that is the hotels and the big businesses, plus the small, like our transportation, small transportations, and our shikara, and then the handicrafts, all those the small restaurants also. So these segments are also getting positive impact because of the improved tourism and improved business environment. Now, as far as law and order is concerned, everything is smooth, and we are seeing a very good uptick in the business given in this year and going forward.
Right.
Okay. Mr. Prakash, let me just take this conversation forward. If you see how deeply undervalued your bank is, at the moment it's trading at a price to book of 0.74. which essentially means that at 71 rupees at the market price, your book value is somewhere like 100 rupees. And as always, the government has, markets have not appreciated the fantastic work that PSU banks have been doing. What are the projections on at least the top line that you can share with investors over the next 2 odd years, that we might see better changes unfolding on the JK Bank environment?
Yes. So as far as our strengths are concerned, we have a very healthy CASA ratio. Still, we are holding more than 50% of CASA, and we are the leaders as far as banking is concerned in Jammu and Kashmir and Ladakh. And this position we will be holding it up. And there is a very well dedicated staff team we are having, and then we have a very healthy credit growth supported by a very healthy CASA. So based on these factors, plus supported by the recovery of non-performing assets, which has been a tremendous story for the bank. So given these strengths, we have given a guidance of 4,000 crores of profit and 5 lakh crores of business during the during the future 5 years, that is up to FY28. And last year we have earned a profit of 1,200 crores, and some job has to be done on the cost to income thing, and we are already on that, particularly relating to the staff benefits. We have quite a substantial retirements which will be happening in the coming 1 to 2 years, and those retirements will be supporting the cause of our cost to income ratio. And we have a plan of achieving 4,000 crores of profit during these
Right.
5 years.
Okay, Mr. Prakash, I wanted to understand more on your margins. Your NIM is around 4%. Would you be able to sustain the margins at these levels going forward? And second of all, your advances have been quite upbeat as well. So on that, I wanted to understand, would you be able to revise your guidance for financial year 2024?
So it will be little early, Sakshi, because as of now, there is some concern as far as the liabilities growth is concerned, and we are trying to fix that gap, this up during this quarter. So maybe next quarter we will see it. We have given a guidance of 3.75 to 3.90. We are still holding it up. And as far as the growth in credit is concerned, we are seeing a healthy growth, particularly in our home territory as well as in the rest of country segments. But this is driven by mainly by home loans and personal loans.
Okay. Your expansion plans, sir, could you talk
Mr.
about
Prakash,
that? Any more branches that you would like to add?
Yes, Sakshi, we had the expansion plan this year. Almost 20 branches we will be opening in the rest of country, and those branches will be mainly on those places which offer a good potential for liabilities, besides assets, of course, and where our presence is still not there.
Mr. Prakash, are there any new business lines that you are adding? Where exactly do you see good demand for corporate credit coming into the bank? Which sector is at the top of your radar, sir?
Yes. So as far as retail is concerned, home loan is our focus area, and you will see that our growth has been quite healthy. Around 20+% we have already seen the growth during this quarter. And in the rest of country, the home loan, when I'm saying home loan, it includes our home territory of Jammu and Kashmir and Ladakh, as well as the rest of country. But corporate book, we have seen a good growth during last year in rest of the country. And all these corporates are high rated and the government companies. We will continue same strategy during this year also, and quite hopeful of having a good recovery, a good growth in this segment in the rest of country.
Mr. Prakash, we are hoping that one of these days you will back a housing project somewhere in Srinagar. and a lot of people from Delhi especially would like to buy beautiful flats there. It's just too hot here. We'd like to enjoy the cooler climes of Jammu and Kashmir, and at the same time buy some fantastic property there as well. Of course, this isn't just, but we do hope that such a wonderful day comes, and we are in a position to buy fantastic, scenic properties in Srinagar, just as a lot of investors buy second and third homes. Thank you for joining us, and it's such a pleasure listening to you. Anything else that you would like to add that we've forgotten to ask, sir?
Yeah, so one thing I would like to add, the overall developments which are happening in the state of Jammu and Kashmir is worth seeing. I would request you to please come and see with your own eyes. There's a lot of scope of further development in this state, and we are the flag bearers of that development.
Wonderful, Mr. Prakash. I had the pleasure of interviewing Mr. Khan. He was the former managing director at J&K Bank in Srinagar, but that was ages ago. I'm sure Sakshi and I and our entire BTTV team will one day make a trip to Srinagar, and we'll come and meet you, sir. Thank you for joining us, and we hope this deep undervaluation that J&K Bank offers, 0.7 times book, and the market cap of just about 7,500 crores versus a top line of 10,000 crores gets recognized by the market, and you see a nice uptick happening there. Thank you, Mr. Prakash, for joining us, and it's wonderful discussing the prospects of J&K Bank with you. Sakshi.
Absolutely. Let's get back to the markets, Shail, and we're looking at some dips on the major indices. The benchmarks 40 points down on the Sensex. Flat trade on the Nifty, 19,678 currently at this point in time. So we are continuously looking at some dips on the major indices, but it's the small caps that have taken the lead again today. We are seeing some green on that one, about 0.4% of an uptick for that index. Apart from this, when we also look at the other sectors, most of the sectors are under pressure. The FMCG stocks are now coming under pressure, especially when we look at stocks like, Imami, for example, Dabur, for example. These are the stocks that are down in trade. Hindustan Unilever, Kolpal, Britannia, all of these stocks are down in trade. Of course, led by ITC, 2.5% now down in trade. What else are you watching out for, Shail?
Sakshi, let us be eternal optimists and look at the green side of the market. Look at BEML. This was a stock that was marked by Mr. Sudeep Shah just about 20-25 minutes ago, and it's opened now into blue sky territory. 1808 is what I see on the charts, up about 2.1%. Let me just check whether that's a record high or not. And apart from BEML, the other counter that Mr. Shah had marked was BHEL, now up 1.2%, 99.15. The mood is very, very good in the broader markets, Sakshi. Defense is taking it away. PSU baskets are taking it away. Look at NTPC, now at about a 15-year high, 198.70 in front of you. Very strong gains coming into the defense space when it comes to BDL, 1208, up 2.5%. Hindustan Aeronautics flat at 38.78. We've seen Cochin Shipyard, fresh record high 710. Garden Reed Shipbuilders, fresh record high 4.3, and of course the star of the day, Masdok, 3.5% higher, 2,000 rupees, and consolidating there. There is no let up in defense, which is on an offense. Sakshi.
Absolutely. Some more stocks that you had also mentioned, and we must mention again, SJVN continues to be the stock of the day again, 9% up in trade, a very strong move right there. Apart from this, Aarti Drugs that we discussed as part of the pharma stocks, that's moving up very sharply. Ramakrishna Forgings, that's another stock that is moving very, very sharply in trade. So while the, benchmarks may be flat, there are enough and more opportunities for the investors to do stock picking in this current realm, and we'll continue to get you more expert voices to find exact stocks that you have to include in your portfolios too. Well, with that, we'll wrap up this edition. Many thanks, Shail, for being with us on this edition, and we'll continue to track the markets and every tick for you. So do stay tuned with us on Business Today TV. Don't forget to subscribe to this channel and also continue to engage with us on our other social media platforms as well. Until then, many thanks for tuning in.